Hey, good morning. Just want to give you a quick roundup because there's been some significant developments which I haven't picked up in my Friday desk review. So really briefly, Bitcoin has reached its brand new all-time high. I want to explain what could be the possible implications of this US government shutdown, and also going to give you some glimpse as to what we could expect in the week ahead. So starting off with the main headline, indeed, Bitcoin has actually toppled into new all-time high territory of $125,000 per coin, which has been led by the Asian trading hours this morning. Incidentally, the US Bitcoin listed spot ETFs have registered a net inflow of a whopping $3.24 billion just in the past week alone, ending October 3rd. The ongoing US government shutdown that I've alluded earlier on seems to have galvanized haven demand for Bitcoin, which is hardly a surprise because Bitcoin is still dubbed as a risk-on asset. Now, there's a couple of interesting estimates from institutions like JP Morgan. They're currently eyeing $165,000 mark by the end of this calendar year 2025. And this is based on the gold's record run, which is up 40% from 119K. Now, this is led by retail investors driving that debasement trade because retails are actually becoming more aware that the savings accounts and those dilutive assets that they currently hold are being debased. And this is why they're calling it debasement trade, because they need to look for more harder assets in which to store their hard-earned wealth in the long term. And while institutional investors are participating through CME futures, which is the Chicago Mercantile Exchange, where institutionals typically trade on the futures bets. So really interesting momentum there. And then the second and final estimate that I find interesting and is in line with what I'm expecting to see is potentially seeing Bitcoin reaching this psychological 200K by the end of 2025, driven by increased demand into Bitcoin since July by large Bitcoin holders and ETFs. So in a nutshell, this momentum gold rush moment is clearly still upon us. The bulls are still here. And as I said, we need to just stick to our own convictions over the investments that we make, whether it's in Bitcoin or indeed other alts and high-graded equity stocks. That's the message. You need to stick to your guns. This is just a euphoria moment that we're seeing, and with every type of investment, there's always going to be that volatility, the peaks and troughs along the journey. But we shouldn't be caught in the trap of panic selling once we see a momentary dip or a drawdown, and just see it into the long term. Particularly for Bitcoin, there is that exponential growth that we're going to be seeing regardless. We've seen that the US federal government has been led to a shutdown by Trump earlier this week. So what could be the possible ramifications or implications of that action in terms of driving crypto demand? So the ETF delays, well, you've recalled in the last week's Friday desk review, I mentioned that the SEC, which is the US financial regulator, have received 16 crypto ETF filings on the likes of Solana, XRP, Litecoin, Dogecoin, and all the rest of it. But now, ever since the shutdown has taken place this week, they're all in a momentary pause. So the October crypto ETF approvals are now on hold as a result of this government shutdown during this week. Could be seen in two ways, either as a deliberate tactic by Trump to further his policies, or it could lead to longer shutdown risks, halting crypto legislation and rulemaking. Again, I'm not going to see that major ramification because given the leaning from the Trump administration to be more of a pro-business, pro-crypto, the longer the shutdown, more negative could be seen as a result. It could be just a momentary pause, which is what I think is going to end up happening, right? And not get distracted by any possible shenanigans of this nature or whatever may come afterwards. All the more reason why we need to take back control over our finances and investment decisions at an individual sovereign level. Now, what's going to happen the week ahead? Well, there are some interesting macroeconomic events that are expected to take place next week. The FOMC minutes, that's due to be issued, which is going to actually set the key Fed tone, seem to be more dovish, which will drive more liquidity for the likes of Bitcoin and other assets, and give us signs of hawkish, which means there's going to be a propensity now for investors to perhaps place their bets on risk-off assets. Also, second to that, Powell's speech is expected to take place where he's going to deliberate on some of the key macro data like the jobless claims. The labour data plus the Fed guidance could actually shift further rate cut bets, which is a good sign because, as I've explained throughout my videos in my channel, every time we see any central bank give any indication or hints for further rate cut, that could only mean as a good thing for investors, because could immediately borrow debt at a cheaper fund rate in order to add to their existing position. So it's a good thing, not just for retail investors, but particularly for the mid caps and the institutions where they heavily rely on leveraging to place their future investment decisions and accumulation. So if that is the case, that can only mean one thing: increased demand into hard assets like Bitcoin and other leading digital assets. So we should expect that to come out in fruition this week. There's two other important macro meetings in China's CPI, which could indicate a possible inflation miss, which means by easing bias, that could only mean more crypto tailwind in the country. And lastly, in the Eurozone, there's going to be retail sales announcements in terms of the figures. It is a key indicator of EU demand. So any mild spillover to global markets, again, could be interesting. So if you read in between the lines, how could this impact me as a crypto investor as a result of these macro events that's going to be taking place next week? Well, if there's a dovish tone or a slight easiness in the data, we should treat it as a sign or a signal for more bullish momentum into Bitcoin and alts, where increasing the liquidity flows will be drawn into those assets. So that's positive. Second, if it's any signs of hawkishness or strong inflation, well, we shouldn't be at all concerned about that, because even though there's going to be some short-term pressure on crypto, as I said, always stick to our own convictions to ride out any possible short-term volatility. So that's the key point. And then lastly, we should always watch out for liquidity, because liquidity is a definitive sign and signal as to how much of the capital inflows are being invested and drawn into assets. Also, we need to look out for bond yields and the strength of the dollar in terms of direction. So in a nutshell, some very interesting announcements. Bitcoin has indeed toppled its new all-time high, but like I said, we shouldn't be drawn into the hysteria and the euphoria moment of any new all-time high records, whether it's Bitcoin or indeed Ethereum, Solana, or any other alts. We should always stick to our own convictions. So that's all I have for you today. As a reminder, just watch out for those deep dive Monday videos starting tomorrow, which you should find interesting. And the message has always remained the same: invest wisely and invest in Bitcoin. Until next time.